Hi everybody, it's Dave Aquino with Basecamp Trading, and this is your free video for Friday, October 2nd. So we were looking at the market action that occurred yesterday, actually late last night, when the news about President Trump contracting COVID-19. So the markets are actually pretty quiet here, a little bit after around 12:50. Just before that, the market started to break lower. Now, this market action is expected when there is news perceived by the market as negative, and you have this strong directional move. It moves all the way from 33.62 in the E-mini futures in the course of a little bit more than an hour, a bit less than an hour actually, all the way down to 3,300. But what's interesting is if the news was really bad in the eyes of the market, this bounce here that occurred would have normally had a retest of the low and possibly a continuation move to the downside. Instead, if we take a look at the high to low swing in the market, you see there's a reversal all the way to the 618 retracement. This is not the normal behavior of a market that is seriously worried about the news that just came out. So with this movement, we kind of looked at that and so, okay, well, we saw what happened when the news came out. What happened when the market opened and we could trade our normal S&P 500? So what we saw was a market that seriously gapped lower. And here is that chart. And you see we gap lower very strongly. Initial reaction. Why? Because the majority of traders woke up in the morning and said, oh my goodness, the president has COVID-19. The markets are going to fall apart. So they entered a lot of sell orders, a lot of orders to purchase puts. And the market's initial reaction was this very quick dip. It opened at 33.40, it dropped all the way to 33.23, and then quickly rebounded. We actually took the reversal trade, the partial gap fill. This space between the low of yesterday and where we broke higher, where we opened. So this was approximately a $20 range. Why did we think that it had a chance to fill this gap partially or all the way? Because the market reacted the same way yesterday or early this morning. When the news came out, the market didn't think it was that bad and it reversed. It did the exact same thing this morning. So again, you need to learn that the market sometimes overreacts. Inexperienced traders that read the news and automatically say, we have to go and be bearish. We have to sell. Short. We have to buy puts. Well, the market takes advantage of them and then quickly reverses. So we played this move of this $20 move in SPX to roughly 33.61. That's the low of yesterday. So it could have been halfway to 33.50. It consolidated there and then it continued all the way to 33.61. That's the normal movement of the market. That's where you can find opportunity if you understand how the market interprets news and how it reacts, and then how inexperienced traders usually react to a news event and be able to take advantage that way. Okay? Thank you very much.